Got like 10K to play with. I'm trying to like figure should I just go the debt way, hyper investing way, but I've been looking at the interest rates and going over, and I'm like, I really don't know. I really don't know. I'm just sitting on it for right now.
So for what it's worth, Venture, I mean, I'll chime in, right? Obviously, not full financial advice,
Of
but
course.
I would say work on paying off your debt for sure. You know, even high yield interest or high yield savings accounts aren't going to get you the same interest rate payback as maybe debt would give you. Um, but having an emergency fund is also good. So, I mean, maybe 60-40, 50-50, whatever your situation is.
I got you. I was just trying to figure out the best thing, but yeah, it's some credit card debt, so I definitely want to clear that. I don't know where you beating that interest rate at, but it's some stuff I had for a while that, and to be honest, 80% of it's not even mine. Maybe 90% is just helping people out and money coming in slow, things building up. And actually, I could have paid it off, but I always had like investments and things. Like even then, I could probably clear out 30% of it, now 50% of it right now, but I wouldn't. I'm never a fan of like touching like certain things I consider investments. So I just let it sit there and be what it is. But I didn't really think about like the yield and like like the interest and all that. I was just like I always saw money just come and go, so I really wasn't thinking about it. But now like I think it's trying to be more serious because I want to get like into the ETFs like you guys and things like that. On top of like stacking my Bitcoin and just diversify a little bit, but at the same time, like, is that responsible if I'm losing money? I don't think so. So I'm just trying to figure out the best way to proceed forward with that thing. But yeah, I definitely take your advice. I done ran it through Grok. Like I swear I spent 6 hours running it through Grok in different ways, different lending protocols, and trying to figure out what the best way, velocity bank and all types of just trying to figure out what was the best one. Like all even Grok said, man, just pay your debt off. So I guess like that's really gonna be I'm gonna get hyper focused on that. So I might start tracking that or doing something with that, maybe making some videos or something, I don't know. But hopefully it blow up and I can pay my debt off. But even if it don't, just keeping up with it, keeping that accountability, and just getting started on that, so I can like really get started on my investing journey. Because I'm real big on stewardship, and like that's really what kind of made everything click for me. So I'm just gotta just be responsible with the money, get out of debt, no masters and all that jazz. So yeah, I appreciate it.
Yeah, thanks for sharing, man. Credit card debt's tricky. It's definitely the first thing I would tackle before I did anything. Obviously, it's your situation's your situation. But yeah, I mean, you can obviously argue, but I mean, if let's say a typical credit card interest rate is 20%, there is not a very high chance you're going to find an investment that gets you 20% every year. I know you can argue Bitcoin and things like that, but credit card debt's definitely something you want to tackle.
Yeah, I feel you. I'm definitely highly experimental with it because the first time I got out of debt, I had to pay a lot of lawyers. I didn't do nothing, but I had to pay a lot of lawyers, and I had racked up about 30,000 worth of debt that time too. And I went hyper Dave Ramsey mode, but also took advantage of some 0% interest credit cards. So I rolled most of it and didn't have to worry about interest. And then I just went working 100 hours a week and doing like some trading here and there. And I actually traded my way out the first time, trading all those meme coins and things like that. I ended up actually like being able to clear like $17,000 worth of my debt and cover my taxes and everything the first time. This time it's a little different. And I'm also not too deep in the trenches and nothing like that. So I'm just like trying to be more responsible with it and not trying to like, gamble and do everything. So yeah, I'm understanding that interest rate at that rate is really nothing out here that's going to give you that guaranteed. Oh yeah, I'm definitely understanding what you guys were talking about from the first episode now.
That's great. That's great. Yeah, work off the debt. But I will give you some ETF tickers off the top of my head that I have my savings in. It's the iShares 0 through 3 month ETF SGov, SGOV. You check that out. It just pays whatever the interest rates are. Like right now, it's at 4.5%, or I mean 4.25%. And then also Spider has theirs. It's called Bill, BIL. You can check that out. It's the same product. But if you do put money in it, I always put it in after the ex-dividend date because it drops us. The NAV will drop a little bit. So I always put it in afterwards. But those two I would check out. And if you have a Vanguard account, or a Schwab account. They have their own mutual funds, and then you can put your money in there. They're tax advantage funds, like with Schwab. It's SWVXX, and I have money in that also, and it pays 4.25%. But there's some tickers to check out.
Yeah, I appreciate it, John. I'm gonna look into that. And you and Elijah, y'all really got me wanting to like dig into the ETFs because I think people like don't understand. Well, at least in my circles that I run in, they like high volatility and things like that. I'm like, nothing beats having steady money coming in, but also like I guess the consistency of how you like continue to dollar cost average and build your bag. Like it's a discipline that comes with that. So I'm definitely eyeing a couple ETFs and things like that. I'm definitely particularly interested in VOO. I always been had my eye on that one for a long time, like at least 10 years, knowing stuff when that whole YouTube craze went on. That's at least the one I felt like I could understand because it's a lot I don't, but I definitely appreciate it and just gonna try to like see how I can work my way and pivots over there. Because even when I ran all this stuff through Grok and by my dad, they said don't complete. Because I thought about doing some crazy high leverage stuff. I'm like, that's completely the opposite of what I'm supposed to be doing. Like, that's not discipline. So I'm like, you know what? I'm gonna just do it the way that I kind of broke it down with my family and with Grok, and it was pretty much like just I'm gonna throw everything at the debt, but I'm gonna still keep a little bit just to like start trying to build. It said like at least set aside something to start so you don't feel left out and you get that reptilian brain and at least feel like it's playing a part. So I still continue my Bitcoin DCA, and I'll start me a little small DCA on VOO and just start getting into those things. And and shout out to Digital for that circle play. Like that gave me a little bit of money too. But I keep all that stuff open, like keep all the stuff that's risk free and just like slow and steady because I think people don't really respect slow and steady, but I respect it, so I don't even feel like I'm missing out on nothing as long as I can DCA and show up and just continue to get into the green. I want to get into the green so I can get into the green, and then I'll be all right. But yeah, I appreciate y'all on these ETS for real. Like all y'all posting things like that's real motivating. Like because I understand it. I like just those increments, like it all add up. So I definitely appreciate it.
Hey guys, what's up? I just wanted to comment on that on the ETFs too, because it's like if you sleep on the S&P 500, you're really doing yourself a disservice because people chase shiny things, AI, crypto, tech, whatever. But if you just hold the S&P 500, I think more people should like tell stories about when it actually successfully happened. And a lot of people don't know, but Warren Buffett made a bet with a bunch of hedge fund managers. So the guys who think they could always beat the market, he made a bet with them. It was like $1 million bet that over 10 years he would just buy the S&P 500 and that they could put up against him, and he blew them out the water. And it was like a public bet too, so it's kind of funny that a lot of people sleep on this. Vanguard funds haven't even been around a long time, so like VOO is amazing, but it's like that's still relatively new and when it comes to investing, because Bogle actually started Vanguard based off of him getting cut out of like a deal, like not being able to be a hedge fund manager. So he started Vanguard out of the necessity to be a mutually owned company, which was like the first of its kind. But now we see it pop up all over. I heard John talk about iShares. That's great too. You got different people actually following the S&P 500. So that's really dope. One of the things I wanted to touch on though was John mentioned SGOV, and he kind of just went over and said, "Oh yeah, it's just you get the interest rate," and I love that. But I think people were sleeping on that because in some accounts you can't even collect percentage on your uninvested cash. So if you're in an individual brokerage like Robinhood, they will allow you. But if you're even in your retirement account, like let's say you maxed out your Roth IRA and you put 7,000 in it, and you're not sure if you want to just dump it or DCA, well, it's not going to earn any yield while it's just sitting in there. So if you get into SGOV, this is a definitely a ticker I use to in my retirement accounts to generate yield on my cash, because like he said, it's risk-free yield, so there's no risk. You're going to get your money back. You might divvy out a little bit of pennies and stuff if you buy it before or after ex-dividend date. Not too big of a deal, but if you have any cash in your retirement accounts and you're still just sitting or waiting, or you're not fully vested in whatever your ETF or your stock, that you want that cash to generate yield. You don't want it sitting there. So SGOV, just don't sleep on that in your retirement accounts. It might sound like nothing in something else, but yeah, just a little hot sauce on there for anybody. That's always my first goal, is to max out that Roth IRA. for the same reason that the S&P 500 is something that's slept onto. So, all that long-term build. But first time on the show, it was nice meeting you guys. This is definitely a space that I'll be coming back to all the time because you guys got your head on right. That's for sure.
Yeah, everything you said, I agree with. Thanks for sharing. It's kind of sparked a question. If so, you can put $7,000 in a Roth IRA, let's say. Why would you keep such a limited amount of money that you can invest in cash? If this is such an advantaged account and you're investing in it because you want to take advantage of all the gains and the tax advantages, why would you put it in something that's realistically you could use a brokerage for or a high yield savings account? It just seems like if you can only put $7,000 in it, you should really be more, and again, this is just my opinion, you should be more kind of fine tuned with what you want to do with it.
100%. But that's just the Roth IRA that has the 7,000. Like just this year, I actually transferred over an old 401k to a traditional IRA, and I didn't want to deploy it all at once because we were like in that volatile stage. So going into SGOV, in February and then barely deploying in, after April was like, it was a blessing because it would have just been sitting there for 2-3 months during tariff talk for no reason. You know what I'm saying? So I'm not saying leave a lot of your cash out either, but if let's just say you have 100K, if you have 2K in cash, you still don't want it sitting there. Even if you have the rest of it invested, you still want that $2,000 to generate some income. Because like I said, you can just sell your SGOV and deploy your cash whenever if opportunity comes. So
Yeah,
that's kind of what I mean.
that makes more sense. I thought you just meant, if you only have $7,000, you might as well be a little more. I don't know. Thank you for explaining. I appreciate it.
I got you. No, yeah, no problem. I'm more of a my like just a little bit about myself. My accounts are mostly S&P 500, and I invest in one stock called Robinhood. That's pretty much it. I mean, I do study a lot of stocks. I look into a lot of stocks. Obviously, Bitcoin's a big deal, and things like Circle. I love when the crypto is like sliding into traditional finance. So though that's kind of like where I like to put my attention in for the stocks, but mostly honestly S&P 500. And I did bet big on Hood, but other than that, I stay away from like picking stocks over the long run, to be honest. So yeah, sometimes I have some cash. Most of the time I'm fully vested though. I think everyone could agree though, this was a crazy year. So like having cash was a blessing this year. If when the dip kept dipping, it was like, where the hell can I get some cash at? So it was one of the good times. Having cash was kind of cool.
Yeah, absolutely. Mac, I see you tossed a couple polls and tweets in the space. Do you have time to touch on this?
Oh yeah, so I just threw the poll I ran yesterday about utilization margin up. The poll already ended, but I don't know if we wanted to talk about it later. I'm kind of exploring that. I know some people have done it. It's new for me. I've always been super cautious, but I just opened a separate investment account that I could play around with, fund to try to use it without really jeopardizing any of my capital or other holdings that I have in my other accounts. So, but I don't know a lot about margin. I've never used it, so I know some people on here do. But I did run that poll, and I thought the results were interesting. That over 50% of people said no, and then I think 31% of the people said yes. And then the other thing I added, which I don't know if I can make it, but as everybody knows, I have a lot of conviction over Joby in the eVTOL, electric vertical takeoff and landing aircraft space. And there's a space tomorrow for anybody that's interested in that. Because I'm going to try to jump on, but it's being hosted by two other people that I know from a different investing community to talk about the new White House eVTOL executive order and effects that it could have in that sector. So I just threw them up there for kind of advertising.
Yo, Mr. Mack, I don't actually use margin either. Because I mean, you always hear scary stories about margin calls or like not being ready or knowing how to use it. But recently I did actually take advantage of like this this perk on the Robinhood app it's like $1,000 free margin. I set a limit to only use $9.99 so that I don't ever have to pay interest on it. Um, and then I actually just used that to generate some more money. Sold a couple cash secured puts on SoFi. So like if anyone doesn't know what that is, it basically you put up the cash for it worth 100 shares, and then you could kind of get paid to do it. So I did it at like $10 or something, and they were printing obviously because SoFi went up. SoFi's probably trading around like 13 or something, 14 maybe. But yeah, that was that's just something I did with the margin, and I was kind of happy with it. But it was the first time I ever used it. To be honest, I'm kind of iffy on like using money that's not mine because it's not the best play. Pretty risky.
Yeah, like I said, I'm exploring it, and I'm gonna fund it with money that I have, and I'm not going. I think I'm pretty disciplined to not use enough of it that I will use more than any reserves I have. Um, but I'm just open for other people's opinions and insights. I've heard scary stories, but I've also connected with people that have utilized it very well, within reason. And I was told that as long as I have enough capital reserve, if the market dips and margin call happens, to then deposit more money, that I should be fine. But yeah, obviously higher risk. So
Yeah, Mac. I have been using margin almost every day since 2015, and I've gotten margin calls. I don't even know how many, probably like over 100. Um, Now, my broker lets me settle the margin within 24 hours. So usually I have to settle the debit, and all that means is that there's a variance between um what my security is worth and like what I have in capital, like in reserve, and how much I've borrowed. And usually that's a pretty small amount. It's not like I have to like transfer over 100K. Every margin call that I've had has been like, hey, you need to transfer over like $3,000 or like $4,000 or something like that. Now, it's never anything that's been like you have to like sell everything you own. I just don't think it's that big of a deal. Um but I can understand, like, people have like scary stories that they've heard and all that stuff. Like, I get it. But that has never happened to me. Now 2015 to 2025, so it's about 10 years. Now, during COVID, I did not get a margin call, but I was down, I think, like $6,000. And I knew that I was going to get it because the market just kept falling. So I did end up taking like a $6,500 loss. I would have gotten a margin call, which I just would have had to transfer over like $6,000 or $7,000, but I just took the loss instead. Every broker is different, but my broker lets me settle within 24 hours. Sometimes they will give me a phone call, but I usually just get an email like when the market closes. I remember my first margin call. I was like, "Oh my God, what is going on?" But it's really it's for me. It's just like, "Oh my God, it's another day. Am I gonna get a margin call today?" It's kind of a joke because I've just gotten so many. Um, but I use it for futures and I use it for a few equities that I own, and that's it. But I use it every day, especially for futures. You have to trade on margin. Um, and as long as I have cash in my bank to cover that debit, I'm fine. Now, I could either sell the security or I could sell part of my equities, and I've done that before. Like, if the security is falling and I'm like, it's just going to keep falling, I'm not going to transfer money over because I know it's just going to keep falling. Because if we're just like in a downtrend or something and I got long or I got short and then the market went against me, something like that. But I don't know. I've heard like people say, "Oh, be careful," and all this and all that, but it's never really from anyone who's used margin. I mean, I don't know. I have friends who use it too, and it's been the same thing. It's just like not that big of a deal. But I also do keep cash in my bank to transfer over in case I do get a margin call. But I can understand that it's really alarming for people, like the first margin call.
Yeah, yeah,
For
no,
me, it's like nothing.
yeah, no. I mean, because you've used it and you're used to it, and I appreciate you chiming in on that. Like I said, I think I'm gonna do it. I'm gonna go small, really controlled, get the feel for it. I'm
Yeah, do
pretty
what you're
diligent.
comfortable with. Yeah. I mean, do what you're comfortable with, like whatever your risk tolerance is. I mean, my risk tolerance is like ridiculously high because I trade futures, but it's whatever you're comfortable with.
Yeah, no, I'm normally pretty aggressive. My risk tolerance is fairly high, um,
Yeah.
which which is kind of why personally I'm like, I think I could be really successful in this, but then I like to gamble, so
Yeah, no, exactly. No, this is what I personally would not do. And Mac, I think you're familiar with this too. It's MSTY, I think it was. I bought, I think, I don't know, maybe like 20 shares or like 50 shares, something that was like really low, like a really low amount of shares. And that is one that I personally would not put on margin, only because that's one that I would have to actively like trade for those dividends because I think their dividend yield is pretty high. I think digital, I think you're familiar with some of those too. Their dividend is really high, but that would be one that I personally wouldn't put on margin for me because that would be something that I would have to actively like look at all the time. And I'm always looking at the futures market, which is always full margin all the time. So, but just for those, like some of those decaying, like I don't know, whatever those securities are, like decaying. I don't know if they're even ETFs or MST, or the yield maxes. Those are. I just feel like those are so risky. Margin wise, but I would put good equities on margin, which I only own two equities, but other than that, it's just futures for me, and then a couple equities.
yeah, really quick, Mark. I do own a small position in Misty, MSTY, and Tesla, which I've talked about on other spaces. And I don't reinvest the dividends. I actually am mining them for their payouts, knowing that the NAV is eroding, and I'm actually buying more secure, kind of higher yield stuff with that payoff. So yeah, I personally would never put that on margin, because
Yeah,
because
yeah,
I've seen the NAV erode so far. Overall, on
yeah,
both of them, I'm still up when I factor in dividends, but I bought those going into it knowing that the NAV was going to erode, right? Return of capital versus return on
yeah.
capital. Um,
Hmm.
and I mean, overall, I'm still up. So yeah, I totally agree. I would not put that on margin either. But I do know somebody that has taken about $50,000 in margin and bought Misty with it. Um,
Yeah, I do too. And I don't know. I mean, I hope he's ahead. I hope he's doing well. Like I really do. But that's just it. That's a risky one. That's a day trade to me. I mean, I don't know when they pay their dividends, but that's like I don't know. That's one to trade. I don't know. That's the only one that I wouldn't like. I would put good equities on margin, but I don't know. Some of those other ones are kind of like, I don't know. They're just decaying.
yeah, no, I appreciate you chiming in. I think Modern wants to jump in on this too.
Annie, you mentioned that a lot of the brokers vary a little bit. I was just curious which ones you recommended.
The only broker that I use for futures trading and some equity investment is Thinkorswim. That's the best one. Now, they require full margin all the time, and full margin, not for futures, they require full margin. Futures, full margin, Thinkorswim, but for others, like for futures trading, is Trade they're really good for that. But for me, I use Thinkorswim.
Cool, thank you. Appreciate it.
Yeah, Thinkorswim or TD Ameritrade, which I guess is Schwab right now. I guess they got bought out like 2 years ago. And then I think Robinhood is very good too. Robinhood's good.
Yeah, so everything I have is Fidelity, which is why I'm exploring it a little differently. I think I can. I'll have to look at it. I think if you have a margin call with them, it's I want to say 48 hours, but that seems too long. I'll have to check again.
Yeah. I've got Fidelity too, Mac. I've never gotten margin called with them. I don't know. Personally, I think it's all over the place. Um, I mean, there have been times when I got a margin call and I settled it like after it was like 27 hours and they didn't sell my positions because normally what would happen is if you don't settle it within the time frame they're gonna just liquidate your positions. And now some brokers will give you a margin call and then liquidate them like without you even settling it even with like within that time frame. But you kind of have to know your broker. I just kind of think it all depends. I don't know what Robinhood is. I don't know what they're like. I mean, Robinhood will let me trade on debit. So if I transfer over like $30,000 or whatever the max is, whatever I transfer over to Robinhood, they'll let me trade on that without even letting me take it out of the bank. So I really think it just depends on your broker, like, and the relationship you have and like the risk tolerance that they think you have and all that stuff, and also how long you've been trading with them. So I kind of think there are a lot of factors at play. But I always think for people who are really interested in it, start soon and start small, and also just be good to your broker. Like, they don't want to liquidate you. For me with Thinkorswim, I've never had them liquidate me ever. And so I've had friends where they've gotten a margin call, they blow it off, and then they're completely liquidated from their positions. And the broker's basically like, bye, like, we don't want to do business with you, because that's somebody that they think is high risk. So for me, whenever I get a margin call, I always settle it or I sell my positions or something along those lines, like my futures positions or whatever I need to do, I do it, because I don't want to mess up that relationship I've had with them. And I've been with Thinkorswim for 10 years. So if somebody's interested in doing it, do it small and do it and just build up the trust with the broker so that they like you and that they think you're low risk.
Yeah, that makes sense. Yeah, totally. I appreciate that. I mean, I'm really tempted to do it, and maybe it's because it's the unknown. But like I said, I opened a separate account, which I'm just going to use it in that because I don't want to risk any of my other holdings in some of my other accounts.
Yeah, yeah,
And
I get it.
if it's not my gig and I blow the money, then I blow the money, and lesson learned.
Yeah, my thing is like, if you can't sleep at night, then it's not worth it. But if you're worried about it, then if you're worried about it and it affects your sleep, then it's not worth it. That's that's kind of what
Yeah, I
I
mean, I,
think.
I I lived through the 2007 2009 crash.
Yeah,
The COVID crash. I got super excited and was dumping money into stuff.
yeah,
Recently, I was, um, in the I guess I'll call it the Trump 48-hour crash.
mhm,
I jumped in pretty aggressively. So I mean, I definitely have the appetite for it.